All right, welcome back to the podcast. My name is Doug Sandler from Turnkey Productions. Mr. John Browning, Southern Florida's finest. Welcome back to the podcast.
I don't know if people would agree with that, but we'll go with it.
Well, I didn't say you're the finest at what. It says,
Yeah, well, there we go. There, all
hey,
right.
look, anybody that can raise six kids and have a marriage that has lasted as long as your marriage has lasted has got to be doing something right, Mr. Browning. So I admire you. I've been married 35 years, but just not to the same one, not to the same woman.
Yeah,
So
we are on 34, and it's not because of me. Trust me. I happen to win the marriage lottery.
Oh, that is good. So you married up then, is what you're telling
Yes,
me. That's
yes, for
good.
sure.
That's good.
Those of
Hey,
you who know Christine know that I am not exaggerating on that.
well, I want to talk about a subject that oftentimes I will see like all of these. Should you buy it? Should you sell it? Should you hold it? So I wanted to talk today maybe about buy, sell, hold. Like when is the magic time to do all of those things, and how do you know when something is a buy or something is a sell? And maybe some of the secrets behind the scenes for all of that stuff. Can we start there?
Yeah, I mean it's a deep, thick
Could be.
subject there, but there's some general rules of thumb. We can talk about um, when to buy, sell, hold as a general rule. And then we can talk a little bit about, I think it's important to when is it time to just get out of a particular company altogether. And because I think that's an important thing to talk about as well. Because the buy discipline of dollar cost averaging, which we talked about recently, and the sell discipline is just as, if not sometimes more important as well. So knowing that
Well,
code.
how about if you look at maybe like the Warren Buffett philosophy, it's buy, and buy and
And
hold
buy more.
and buy more and just hold it forever. Where is the downside in that? Or maybe just share with our community what is the strategy all about, and how do you know when to, in general, when it's a good time to buy, to hold, or to sell it and get out?
Yeah, and the issue that I have with that, right? It all sounds good, sounds very logical. Just buy, and hold forever. But even Warren Buffett sells, as he has done quite a bit of actually this year.
I
Uh,
heard something like he's got 3 trillion, 3 trillion
that's a
I
lot.
don't,
Yeah,
I don't know,
yeah.
300 billion. I don't even know what it is, but I'm like, why are you putting all this money in cash? I'm very interested in finding out what's
Yeah, I'm a
going
little
on.
worried. Oh, why is that? And there's a lot of speculation on that, which I could go and do a whole podcast as to why Warren Buffett, does what he does, or most likely one of the reasons I think that he did do some sales and take some gains is because he had a pretty big loss on the insurance side. So what better time to take off some gains for tax purposes, right?
Right,
And
right.
that's something that we're going to talk about in a
Okay.
episode, the power of getting to zero tax brackets. But there's reasons why Warren Buffett does it, but they're not the same reasons that you and I do it, right? We're way different. If we're going to live off this at some point in retirement, or we've got a particular goal that we've set and we're going to spend it, it may not be the same strategy as a billionaire.
Hmm.
Like,
Okay.
not may, it's not, right?
All right. Well, then let's talk about it. Overall, the strategy of buy, sell, or hold. How do you determine what to do and when?
And so I've said this I think once or twice before on the podcast, but it bears repeating is that using math and being disciplined and consistent is important. So you'll often hear hold on to your winners, sell your losers, certain little phrases that people
Mm-hmm.
use. And it's really oversimplifying. I tell people don't oversimplify and don't overcomplicate. Both of those ideas are bad. Oversimplification's bad and overcomplication's bad. So the way that I do it is I use math. So making sure your portion control is right.
Mm-hmm.
So no one security in your portfolio should be over a certain percentage, and that depends on how much
Right.
your risk parameters are and what keeps you up at night. But just know that even though a security or company has gone up 30, 40, 100, 900, 1,000%,
Right.
They can also fall 30, 40, 50, 60, 70% in a very short period of time with just a stroke of a pen, a YouTube video, um, some geopolitical event, or a lawsuit.
Okay.
And you do not know, as much as you love them, as much as you think they're great, whatever. And I have companies like that. I am really excited about some companies that we have in our portfolios, but they're never more than a certain percentage of our portfolios. For Guardian Rock Wealth, as a general rule, we'll generally start a position as roughly 1, 2, or 3% of a portfolio. And if it grows over time, fantastic. We'll hold on to it. But if it gets into the 5%, we're looking at it very closely. We're doing a little bit deeper dive into the fundamentals.
Hmm.
It gets up to 7%. We have a hard and fast rule that we are shaving off pieces of it. We're not eliminating the position,
No
but
matter
we're
how
reducing.
well that stock is doing, and no matter how good it looks, and the market is saying it's going to continue. I keep thinking of things like, some of the tech sector stocks, or even some of the crypto stocks. It's like, look at Bitcoin as an example.
Right,
It's like, wow, what I put in there 5 years ago, could I pull out the profit, the couple $100 that 5 years ago? That would be like nothing compared to what it's valued at now. But do I still pull that couple $100 out and put it in something else? Or do I just say, I don't care about the couple $100. I want to let it ride in the stock because the stock seems to be doing really well. And that's just that particular example. But there are many stocks that follow that, especially, right now with the market just continuing this uptrend. It's like, okay, do I want to pull any profit out of this? I seem to be
right.
doing really well in there.
Yeah. I mean, and different people, depending on the risk parameters, use a different percentage. But all successful investors that I know of that are successful over time have some sort of discipline in place. Um, Sometimes that's as high as 10, sometimes even as high as 20% of their portfolio. Now, that is getting really aggressive and risky. Think about 20% of your portfolio falling by 30 or 40% over a
Mm.
period of 24, 48 hours, because it does and has happened.
All right. So using the philosophy of whatever X amount of percentage that you decide based on your risk tolerance and all of that, you're pulling some of that out. What do you do with that? So you sell a portion of that winning opportunity because it's hit a ceiling where you said, at this point, at this win, I'm going to take a percentage. How much of a percentage do you take? And then where do you put it and what do you do with it?
Well, just like you dollar cost average,
Hmm.
DCA, into something like that, you might want to dollar cost average out. So you don't do big chunks all at once, generally speaking. So you're shaving off a few shares. Maybe it's a quarter of a percent or half a percent one day, and then you wait a little while, and maybe it goes up, maybe it goes down. But whatever you do, you have a disciplined sell process coming out. And if you're doing it right, you're watching your percentage, and you don't have a lot to take off, to scrape off, so to speak, of it anyway. And then what do you do with it after that? I would argue that there are always, and I very rarely use that word, there are always opportunities in the market if you are paying attention. And maybe it's a particular company that's had a piece of bad news, and they've already fallen that 20, 30, 40%. But
Right.
you know the fundamentals because you've done your research. You know the fundamentals are great. So then you're buying shares at a lower price. Those shares are on sale. So there's always some place to put it. Or maybe you're getting closer to retirement. You feel like you
Hmm.
need a little bit more income. So you put it into an income producing security.
All right, so you have your ceiling. Is it called the ceiling when you get to the winning the price that you're going to sell at? Is that what it's
Yeah.
called? Okay.
Mhm. Yeah.
So
Yeah. Mhm.
so you have the ceiling price. You shave a little of that off so that when it gets to that ceiling price, again, are you bringing it down so the percentage of what that is in your overall portfolio is at an acceptable amount based upon whatever strategy that you have going into it, right?
That's right.
Okay. So
Yep.
that's on the winning side. On the losing side, though, I'm always challenged with this. On the losing side, it's like, hey, I've been a really good proponent and a good student of the buy high, sell low club. So it's like, all right, so I bought this stock at $10 a share, and I set a low point, so a floor on that at how what do I set that at? Again, help me for a moment here if you know what it is on the high side. What is it on the low side when you're losing X amount of dollars or X percentage? What is that percentage?
So I don't necessarily have a percentage. If something goes, and this is one of the few things I don't have a percentage loss on, but there's several things you want to look at when a company starts having trouble. What's the cause of it? Did the CEO
Mm,
leave?
okay.
Is there, in air quotes here for those not watching on YouTube, is there an accounting anomaly that has been brought up, such as in the case of one security, not investment advice here, by the way, but SMCI had accounting anomalies,
Don't
and
like that.
that doesn't sound good. And then their auditors resigned.
Oh yeah, not
Don't
good.
like that either.
No, not
So
good.
that was a pretty quick sell for me.
Right, I got it. So there's things like that you wanna see what the reason is why the stock
Yeah,
might have gone. So you have a losing stock and you say, okay, I'm going to sell this. So do you sell it all? Do you sell a percentage of it? What do you do?
accounting anomalies. Just
Sell it all. Sell it all.
yeah,
I think I know that one.
Boeing was another one, right? They had, just there was everything, right? I mean,
Yeah, they even had problem
accidents
with
and
the
everything else.
yeah.
And the reality of it is, and this is one of the good things about having a nice diverse client base, is I happen to know and have a client that works on airplanes and does the maintenance on airplanes and signs off on airplanes, and he's like, it's arguably not really Boeing's issue. It's probably the maintenance crew's issue. If you don't put all the bolts in, or if you know it's your job, right? And so I actually hesitated on Boeing longer than I should have, because
Hmm.
the issue didn't seem to necessarily be Boeing. But then, of course, then that caused more digging into what Boeing does and what they don't do. And so then we ended up just selling out of it, because the power of the press
The
was
emotion
so
that's
bad.
involved, yeah. When you start to get emotion involved, you can watch a stock just tumble completely. And then on the other
Right.
side of it too, emotions involved in something that's going up. If you're looking at something like again, I'll use the example of Bitcoin, not investment advice at all. Certainly don't follow my investment advice at all anyway. You'd be talking to John. But Bitcoin hit that magic number of 100,000 at one point in our past. And there's an emotion that says, I have it on my sell list. When I get to 100,000, I gotta take some profit from that. You
So
know,
hard for people to do. So
right?
difficult. Yeah.
Yeah, because they see it. It's like, well, it's going up. It's going to continue to go up. I can't take any of the profit from it. It wasn't that much to begin with, but now it's at 100,000. Now, come on, don't we have to take profit? So on both sides, emotion is involved, and I would even speculate to share that even to hold it, there is emotion involved because you
Hmm.
don't know if you're making the right decision or the wrong decision about the hold. So is there a mathematical equation as to when it's proper to hold this?
To hold something that has had bad news and is trending down, or
Just anything. I mean, it hasn't hit my high point and it hasn't hit my low point. Do I just I'm staying in the game then? So my philosophy is if I haven't gotten to my ceiling and I haven't hit my floor, I guess I am going to hold it. If
you're going to
the
hold it. Yeah.
experts say hold it, so I'm just going to hold it.
Yeah. And you're again, did anything fundamentally change at the company? Like Chipotle is another example. We hold that in our portfolios. When they lost their CEO, which had been, he was a great CEO for Chipotle
Yeah.
and amazing. The stock price dropped like precipitously, shall we say. It is in one day when that was announced. Emotionally, oh my
Right.
goodness, sell the stock. because the guy who got it there has left. But you know what? He had some long lasting effects on Chipotle. A lot of they use a lot of AI. The fundamentals are good. They have better same store sales than almost any other fast food restaurant. I don't think there's no reason for that to change.
It's funny. That's
Somebody
when
would
I
have to
that
be really dumb, right, to come in as CEO and just change what's working really, really well. And so we made the decision to hold through that because nothing had really fundamentally changed, but it was of note. And we were careful about that. We really thought through it because sometimes it is the CEO that kind of holds the whole place together.
and I even think when the stock dropped, and again, the emotional knee-jerk response is the CEO that created this entire winning formula has gone. Stock dropped. Now the stock looks like it's not at the value that it should be. I would think that's actually a
Yeah, you
time
might
to
want to buy
buy.
more.
You might buy
Exactly.
more. You know,
Exactly.
again,
That's the dollar cost averaging. If you're consistently going in, you would have been buying more.
that's how my brain works that way. I just feel like it was an anomaly that the stock went down. I mean, it's certainly there was something that it was based upon, but the market emotionally responded to that. Maybe it's time to buy more. Again,
And
I don't know. That's
one of the things that often makes a CEO great is the fact that they build a company that can function without them.
yeah. Yeah. Yeah.
So
Nice. Okay, I got it. So buy, sell, hold. Seems like it's three pretty simple things to put together. Where do people screw up along the way?
it's all about it really is all about their emotions. Or probably the biggest one of the bigger destroyers of wealth in the country is CNBC. Right?
Oh, because of the advice that they provide on
Yeah,
the
I
on
mean,
the stand.
they provide. I mean, it's not that they're providing advice, right? Same as me. You know, I don't provide advice in this fashion, but they'll come in with a, you know, an expert and frankly having some experience with CNBC and NBC, all those show Bloomberg. When you go in, oftentimes, you know, there's two of you, and you decide together because we're all most of us are friendly, right, to each
Right.
other.
Right.
But you want the bull side or the bear side, and we're all good enough and we know the security or the sector well enough to make the argument on both sides. It's
Mm-hmm.
what makes them good at their job. And they're just arguing back and forth and all that. And afterwards, they all go out for coffee or some other beverage. And it's just, it's entertainment. And, but yet people believe it's real. You know, people truly believe that, oh, well, so and so said that XYZ stock was bad today because this happened. And it's just all you have to do is if you really look at the track record of some of these guys, maybe not a great place to get your investment advice and
Understood.
make trades that are going to seriously impact your financial future based off of what you saw in a soundbite on CNBC.
So when you are ready to talk to John and you're in our listening and viewing community, make sure that you let him know what station you're watching, so he knows exactly what direction to send you in, so that you can get the right information as opposed to just what the pundits are saying on the air.
That's right. Yep. All good people, by the way. I didn't really meet anybody that was a jerk or bad person. It's just that's what we were paid to do. We were, you know, that was the job. Is to get on there and give both sides of the information and but whichever one seemed more compelling, you know, that's the one you pick. But really you're a plumber, you're a electrician, you're a teacher, you're an accountant or whatever. It's, you know, investing is not your thing, right? So
And just remember, no one has the infamous crystal ball in their hand, so nobody knows what the market is going to do. They're just taking their best scientific, researched. I don't want to say guess. It's more than a guess, but
it's a forecast, you
it's
know,
a
it's like,
forecast. Thank you. That's good.
yeah, it's not a forecasts can be close, they can be far away, you know. I mean, the winds blow a different direction, but it's their educate certainly an educated guess. It's based on history, it's based on, you know, what things have changed that since the last time something like this happened. It's there's a lot of thinking and it's a complex adaptive system that nobody can quite figure out.
Past performance does not dictate future results, is
There
what
we
is
go. We
what
got that
was
into the compliance guys we
got
have.
that. That's right. That's right. Hey, for those that are in our community, if you want to get more information about what John does and how he does it, Mr. Browning, step up, share with our community how to get in touch with you.
Best way is go to guardianrockwealth.com in the contact us section and reach out. We will get back to you right away or text the word life. Grab your cell phone. I'll wait for a minute. Okay, everybody grab their cell phone, open up that texting app 321 421 5213. Type in the word life, send that, and you'll get a link to all kinds of information. It's all free and also a link directly to my calendar.
All right. 321-521-4213.
321 421 5213.
I've memorized it now. It's amazing to me. I don't have to look at it on the screen anymore. It's now in my head, like that the Empire, the carpet people.
Oh, yeah. Oh, don't get me
I don't want
started.
to don't want to yeah, don't want to sing that right now. All right, Mr. Browning, thanks for being here. Thanks for sharing your expertise. And I know we got another a great episode that is coming up beyond this one as well. For those of you, if you want to see how John interacts with real people other than me, the co-host of his show, just check back on the YouTube channel. He's actually got real live guests that he's talking to other than me. So you want to check and see some people that have a lot of wisdom in the financial world, just check it out on his YouTube channel. But thanks for tuning into the podcast one more time. Thanks, John, for being here.
All right. Thanks.